Well, first of all, welcome everybody. I'm Tyler Carter with NuView Trust. This is another installment in our educational webinar series. We've received a lot of feedback that people in the industry want to hear about the perspective of a custodian. And of course, I'm never short for words. So I'm happy to have some guests this time to share some industry perspective. We're very fortunate that today we have Tony Alexander and Haley Knopf from Great Oak Funding. And I'll let you guys introduce yourselves.
Thank you. Haley, why don't you start?
So as mentioned, I'm Haley and I am the head of our investor relations here at Great Oak Funding. I started off at Wright State University and have a degree in marketing from there. Did about 6 months in the digital marketing space, and then I came to Great Oak just under a year ago. So that's really when I entered this space. And then we have Tony, our CEO.
Yeah, so I'm Tony Alexander. I've launched the company in 2015. Prior to that, I practiced law. So, I've really been in the space more or less that we're in on the lending side for some amount of time, but new to the investment side about 4 or 5 years ago.
Well, we appreciate the business that we've done together over the years. I thought that you, of all people, would also have a unique perspective and kind of be able to share some education, the things you've learned and some things that you would have done differently if you could go back in time. Tell us kind of a little bit about, Great Oak Funding, who they are, what they do, and we'll kind of continue a little bit deeper from there.
Okay. Well, I guess first of all, both Haley and I want to thank you, Tyler, and NuView for this opportunity. So thank you. For all of those out there, happy to be telling a little bit about our story. So Great Oak Funding is a commercial lending organization. We work with businesses that have a track record of success. So an existing business that, for whatever reason, is unable to obtain traditional financing. So not necessarily companies that are in distress or, on the ropes, but those companies that would otherwise be successful, have had a track record of success, but for whatever reason, they've gone to their bank has turned them down. And so we come in and try to provide some short-term capital, usually 12, 24-month money, bridge lending. It's asset-backed lending, so we're secured against either real estate or equipment of the company. That's kind of, what our focus is. My business partner, Jason Downey, and I actually formed Great Oak. We both came out of what's called the workout space. So we actually did work with distressed companies. I practiced law for about 20 years, and that was a primary focus of my practice during my latter years. Jason Downey worked in the area of finance and commercial underwriting. We actually met on a workout opportunity, a manufacturing company. He was brought in to find alternative financing, and I was brought in to help the company negotiate its situation with its existing lender. Throughout that process, which took about a year, we really got to know each other. And we both had very similar views of businesses, which ones we thought could be successful versus those who, may continue to struggle. And so part of our focus is to identify those companies that we think have that opportunity to right the ship, get back into traditional financing, and then provide them that capital they need to accomplish that.
Very good. I think what's interesting is in my day-to-day activities, I speak with a lot of sponsors, both who are raising capital through the independent broker-dealer RIA kind of channel, and those who've done sort of a friends and family raise, or those who realize they need money, but they're not quite sure how to go about it. So that's why I'm appreciative that you guys are here to talk about this, because I field so many questions about raising capital. And I think in our business, we think of investment sponsors, their day-to-day business isn't raising capital, right? You just explained what it is that you do day to day, but it takes money to do all those things, right? It has to come from somewhere. Tell us sort of about maybe the genesis of how you were raising capital and perhaps what it was that made you elect to pursue retail investors.
Yeah, so I can tell you it was not a straight line, that's for sure. As I've told Haley many a time, we were absolute babes in the woods when we started this. We really believed, hey, we're going to put together this company, and we're going to go out and raise private investment to fund our loans, which is how we actually provide the capital for our loans, is through private investment. And we just thought, man, we'll have a nice return. We know what we're doing. People will just line up to give us cash. And well, that's just not the way it works, right? Raising money is hard. I mean, it's work and it's hard. We went out and we were able to raise some funds through friends, family, and our private network. Small amount of cash. Put that money to work, and saw that everything was working, pretty much the way we thought it would. Obviously, with anything, you make some adjustments along the way. But we realized we'd used up all the cash that we had raised, and we needed to raise more. And so we went back out, and we quickly realized you can only go back to the same individuals so many times before they're just exhausted on it, right? They've given you the cash that they have available to invest in your type of product. One of the other things that we did not think about or know when we started is just because someone is a high net worth individual, and just because you have a nice product doesn't mean they're going to give you money. There's folks that you meet who say, look, I only invest in medical startups, or I only invest in, cannabis right now, or whatever, the product line is, and just were not interested in the type of product that we were putting out into the market. So, as I said, it's hard work. And what we realized is that we were going to have to raise money on more or less a continual basis. And so, can't go back to the well too many times before the well runs dry. And so we needed to expand our capability to raise cash. And so we were fortunate. One of my partner Jason's friends had been in the retail space, and so we talked to him, and he made an introduction to us to Allsdale Financial Partners, which is our managing broker dealer. And through that connection, recognized some of the steps we needed to take in order to get into the retail channel. And so, using that retail channel is really important, because that's how you broaden out your sales team and that network of folks who are out there raising money. You can, try to find lists of high net worth individuals and just go visit every one of them. But, the retail channel provides that ready network of financial advisors and reps who are able to connect with their existing client base and help you raise the dollars that you need to raise.
Wonderful. Yeah, I appreciate that. It's funny, before this webinar, we were talking about the fact that it's a lot of my family members don't even know exactly what it is that I do. And despite the fact, that I'm passionate about NuView and what it is that we do, it's an exciting industry. It's never a boring day at my desk, right? I get to see all the unique deals that people are putting together and speak with, interesting people and hear about all of their strategies. That being said, sort of out of selfishness, at what point in time was it kind of that you realized there was a need for a custodian, what a custodian was, and that role that they play? And I ask that because I speak with a lot of people who are, many steps, time-wise kind of behind you, right? They're starting to realize they need to raise capital, and I call on them and introduce myself that we're a custodian for alternative investments. Maybe I should have been a doctor or a lawyer. It'd be a lot easier to tell people that. But, put it in your own words. When did you sort of realize that a custodian was a component in what it was that you were going to do?
So I'm glad you asked that question, because it's kind of comical, because as I said, we came into this arena knowing so very little. And, we met with Allsdale, and I think somebody at one of our initial meetings said, well, who's your custodian? And literally I had no idea even what they were talking about. No clue whatsoever. And so, I get with our guy that had been in the retail channel, like, what's he talking about? What's a custodian? What's their role? And then realized, especially for us, custodian having a custodian is extremely important because the type of income we generate is ordinary income. And so a lot of our investors want to come in through some sort of a retirement plan, an IRA or 401k, and you have to have a custodian who will, hold that product for them. And so, and agree to put, sorry about that, Haley lit the office on fire. I don't know what's going on. But you find out very quickly, you have to have that custodian in order to bring those types of dollars in the door. And so for us, it was extremely important. We just didn't know it at the outset and didn't even understand really the process to get onboarded with a custodian. And I think, Tyler, you were the first person I ever talked to about.
I'm sorry for your luck.
About what a custodian is, what they do, how you get signed up. And I can tell you that not all custodians, we work with several now, just because of the different folks we're working with. Not all custodians are created equal. And you need to, find those that you like working with, where there's a good relationship. And I can, I'll put in a 2-second plug for you guys. One of the things that we know is we can call you pretty much anytime, and we get really immediate response. And that responsiveness is very key because it's not uncommon that an investor will subscribe for purchase of your units or shares or whatever, and they won't have the paperwork correct, or there's some delay. Maybe they're rolling money out of one account to another, putting it with NuView, and there's a delay, and it's like, well, what's going on, right? And you guys have always been great about helping us track down those issues, get things straightened out very quickly, and so that those dollars come into us, which obviously, as the sponsor, that's what you want, because the sooner you get those dollars in, the sooner you can put them to work. And so, having a custodian that you can really have a good relationship with does make a huge difference.
Well, I appreciate the kind words. It is a big responsibility. You touched on the component earlier about kind of accredited investors that maybe invest in kind of a specific area. What we've learned is that just because they're an accredited investor doesn't necessarily mean that they're a sophisticated investor. And that if this is someone's first alternative investment that they're making, even if it's through their advisor, differentiating between the sponsor, the custodian, their advisor, if things go awry at any level, it just reflects poorly on everyone. So we try to do whatever we can to rectify those situations and ensure that investments happen as seamlessly as possible. I think where we do try to differentiate ourselves is by providing more than just custody. We want to provide some educational content for the people that we do business with, and even the prospects that we talk to that are thinking about raising capital. I think kind of getting into the meat of this webinar, as you guys started down this path, what are some of the speed bumps, roadblocks, hurdles you had to overcome? I think this is the part where everyone else wants to learn from other people's mistakes if that's possible. And while I know that you guys have been immensely successful, it hasn't always been smooth sailing. Do you have some comments to make? I'm sure you do.
Absolutely. As I mentioned earlier, we were really naive, babes in the woods on this. And going from talking to, my friend Joe to working with advisors, working through a broker-dealer network, it's just a whole different world, right? It's easy to call up your friend Joe and say, hey, I'm trying to raise money for this project, and, are you able to help out, right? That's very different than trying to design a product, as a sponsor that is not only attractive to your friend Joe, but attractive to an advisor who then has to present that to their client, right? Because those may not be the same thing. And then, we didn't really, I shouldn't say we, because Haley wasn't with us at that point, but as a team, we really didn't even understand the difference between, an advisor who is with a broker dealer versus a rep or an advisor who worked under an RIA, right? And how marketing to those two different groups is very different, right? Because one is fee-based, their client pays them. The other is commission-based, you pay them. And so, you know, having a product that's attractive to both is very difficult. And, you know, I can remember meeting with a good friend of mine who was with one of the big houses, I think Merrill Lynch or something like that. And his immediate response was, well, you know, we can't put your product on our platform, right? It's like, and I had no clue that that was an issue for them. So you have to understand the market, you know, as much as you can. And that was a big hurdle. It's just learning the phrases, learning the words, and understanding what each term meant and the importance of each one. As I mentioned earlier, when someone told me we needed a custodian, I didn't really think janitor, but I I really did not have any clue what they were talking about.
Right.
And then, oh, you'll need this person and that person, and you got to, you know, do all these things. And have you been to this conference and that conference? It's like, okay, you know, 1,000 things are flowing at you in a heartbeat, and you're trying to understand them all. And one of the, I think, hurdles is, you know, there's not a package of information. There's not, you can't walk down to your local library and pick out a book and say, oh, okay, here's every step I need to do as an alternative sponsor to get me from A to B and to success. So you learn a lot just by, you know, trial and error, mistake, and all those things are expensive. So those are all hurdles you got to, you know, come through. Yeah, I can tell you our first product that we took out into the retail channel, we were at a conference, TNDDA conference, and the immediate feedback was like, we really like what your project is. We like what you guys are doing. No one's going to sell your product. It's like, well, what do you mean no one's going to sell our product? And we had this really weird commission structure, you know, just really different, really out of the box. And they were like, you're just too new. No, you know, no one's going to buy onto changing a commission structure with someone who really has no track record. And so getting that feedback was helpful because we went back and immediately changed and came back out to market. But, you know, those are just things you don't know as you're starting out. And, you know, like I said, there's no classes in college that I took, and, you know, there's just not really a handy dandy guidebook you can pick up and say, you know, here's the path forward.
Yeah, no, I think that's probably fair. You know, I know you're a super bright guy, but there's, you know, no one can be an expert at everything, right? And even when you have known unknowns, sometimes you need someone else to kind of highlight the unknown unknowns.
Yes.
You know, kind of along those lines, there are multiple parties kind of involved. What were some of the processes, you know, that you put in place? Who were the people that were kind of on your team, so to speak, that were, you know, extremely important in everything kind of going smoothly? Can you speak to kind of those people?
Yeah, so I mean, obviously there's our internal team and then there's our external team, right? And so our internal team initially was really just my partner Jason and myself, right? And it was, hey, we're going to raise money and we're going to place the loans. And, you know, we were small enough at the outset where really the two of us could kind of handle that. We've since built out our internal team. Haley's with us and we have others. But we quickly realized that we needed to build a much stronger external team. You could, I guess, if you are capitalized well enough, hire all of these types of folks. But I think most people really, at least at the outset, kind of build an external team. And so obviously one of the key folks you need is that managing broker dealer, right? You've got to have that, you know, group that's actually going to be you know, help you as a sponsor get into the market, right? And picking a managing broker dealer that aligns with your product, aligns with your interests, that's supportive of you is critical. Because again, they're not all created equal, right? We were very fortunate. We out of the gate aligned with a managing broker dealer, Allsdale, that, was supportive of us. Matter of fact, has been very helpful to us over the years. And so that, that was a nice launching pad. And then very quickly we realized we needed a national accounts rep. Like, well, what's the national accounts rep, right? Like, what do they do? What's their role? How do we find one? And so fortunately, matter of fact, I think in your last session, you had Michelle Gillespie of Rep Driven Results on. We aligned with Michelle and her partner Lee. And the role of that national account rep is essentially to help you build out your selling team. And so, you start out with your managing broker dealer, and then you try to get agreements with other broker dealers to, broaden that team, right? You needed a custodian, right? So, okay, how do we do that? You need wholesalers. Well, what's a wholesaler? What do they do, right? So, and then you need all the other things that go along with it, right? You need banking, you need legal, you need accounting, you need bookkeeping. So suddenly you are tasked with doing all of these things and finding all of these folks that you may not have even been aware you needed, right? But they are going to be critical to help you build out your product. Most sponsors in the alternative space are coming under Reg D or Reg A plus. If you're not familiar with those things, then you better have good legal to help you get there, right? Because you don't want to be messing these things up. We're audited, so we had to have auditors. We have to do a NAV every year, so we had to have a group that comes in and provides a net asset value of our product on an annual basis. So on and on and on, and suddenly you're connected with all of these people that a lot of small businesses just don't have in their world, right? But because you're raising money through the retail channel, it broadens out who you need to have on your team. And I'm sure I've left somebody out. Can you think of anyone?
No.
But there's and then you're going to have to go to conferences, and so you need a marketing group, and you need it just evolves and evolves, and suddenly you really find yourself in a situation where you're working with all of these different parties who have different roles, all of whom are there to support you and help you kind of be more successful in the market.
I appreciate that explanation. You're certainly drinking through a fire hose when you're going through that process. It's funny because there's not, to your point, a book that you can really read about this. And if I ever try to explain it to anyone, I say that it's sort of like if you explain to someone how to ride a bicycle, right? If you said, look, you've got a balance on two wheels, you've got a pedal, there's brakes, both a front and a rear, you've got to shift gears. It seems overwhelmingly complicated. But once you've done it, and once you kind of have that education that you understand how everything works together, I assure everyone that it's not nearly as convoluted as it probably sounds. And you're a good testament to that you figured it all out.
But now it seems pretty easy. You're right. The other thing I think, and this is something that, I think is good advice, is you will build out your team, and especially early on, the team may be well suited to you, but you do have to realize you may outgrow one of the members of your team, right? So if you're using your, friend from college that did accounting, well, you get big enough and suddenly that person may not be able to kind of fill that role for you any longer. So it's always hard to move from one to another. But you do have to be cognizant of the fact that can occur because you may just outgrow the existing, advisor or team member you're working with.
Yeah, very interesting. We've got a couple questions I think we might be able to address. Let me look through here. We've got a few people who are interested in kind of connecting to learn a little bit about either your lending, parameters, or that they're willing to make introductions. They asked about kind of credit criteria for lending and sort of the typical size and profile of credit lending by you guys. If you want to give right now, just to make sure we don't have to wait until the end, your contact info, so that people can reach out? Let's do that before it gets too far into things.
Yeah, so we are always in the office. Our office line is 937-949-7151. And then we can also be reached at, mine is hnoff@greatoakfunding.com and talexander@greatoakfunding.com.
And then you can visit our website, which is greatoakfunding.com. So we're not real creative here, as you can tell.
No, I think you kept it simple. That's one of the tough things with NuView, obviously having the U in the title. I have to explain that a little bit more in depth than you guys do. So great. Keep the questions coming if you guys have any questions about, specific capital raising and so forth. But it looks like there's a few people that are definitely interested in speaking with you kind of about your terms, parameters, and what your deals typically look like. I think, many of the people in attendance and people that I intend to pass this along to, as I've highlighted before, are sort of just making their foray into this space. They're going through that period where things probably sound overwhelming and they might be questioning whether they ever took my advice to, consider this avenue. If you had a couple of tidbits of information, just sage words of advice for those that are considering this, what advice would you have for them?
Well, one of the things that we did that was a positive and a negative, if you will. So, if we went out and raised money and got started as a company and started making loans and started doing the things we do. But that put us in a situation where when we hit the retail channel, we were really under pressure to raise money very quickly and to get to market very quickly. And so I think part of that need to get to market quickly, shortened our time horizon to really learn and understand the industry. And so my advice really would be, talk to people like you, right? What do you do? Find out who some of these other parties are and talk to them in advance of launching your product, or as far in advance as you can. Haley's kind of newer to the market, but what's your perspective on that?
So I would firmly put myself in the category of people who are still drinking from the fire hose. It's definitely a big change and there's a steep learning curve. My advice is to lean on that team that you build for yourself. Our team members have played such a big role in my education on this space, from our internal team, Tony and Jason, the other principal here, to Michelle and Lee at Rep Driven, Jeff Simpson at Osdale, and you, Tyler, and Tyler Hood as well, on making sure that I know what a custodian does and how that process works as I work with the advisors and the clients who are actually moving through that custodianship process. So my advice is ask a ton of questions and lean on your team heavily to make sure that you are up to speed.
Yeah, I think that's good advice. I'm surprised, maybe it's because people just want to get off the phone with me, but I'm surprised that I don't get, more questions, from a lot of people. And I'm always happy to make, referrals to when people are interested in learning more. I think the due diligence firms are another probably good, an integral component, right, that are in this process that can sort of shepherd you along the way to raising capital. And I think that a lot of people are sort of nervous, right? You're a successful attorney coming into this field. People are really confident in themselves that they're making this kind of entrepreneurial endeavor, that sometimes those people are reluctant to put the cards on the table and admit that, that's a term or something like that I'm not familiar with. And I think that's kind of important, that you have to sort of be humble when you come into this and realize that it's, with all the acronyms and terms, it's almost like learning a second language, isn't it?
Yes.
So I think,
don't be afraid to ask questions, and don't be afraid to admit you don't know something.
I think that's probably good advice for life in general.
Yeah. One of the things I have found in this industry, though, is more than any other arena I've worked in, is people in this industry do seem very helpful. We've been, graced or whatever with a whole host of people who have gone above and beyond to give us good advice, and really take an interest in our success, not just, you know, is my check coming, you know, but really interested in taking that next step, mentoring and guiding us along the way. And that's critical. So surrounding yourself with a good team makes a big, big difference.
Yeah, I think that's a very good point. You know, it's interesting, financial services or finance or whatever, you know, term you want to put on it is so broad that I think when it comes to alternative investments, we are a tight-knit fraternity when we recognize someone that didn't just pigeonhole us into like, oh, you're a, you know, Merrill Lynch guy or whatever, something like that. So I've had the same experience that everyone is, you know, exceedingly willing to be of assistance and help. You know, what sort of encourages you about raising money through this avenue going forward, and kind of what sort of predictions, forecasts, opinion do you have that would be of benefit to the people that are in attendance?
Yeah, so, you know, we're getting ready to launch our 6th raise here soon.
Congratulations.
So, you know, we've kind of traveled the path a bit, learned a lot. What encourages me right now, I do think there is a great opportunity right now to raise capital. I think there's a lot of cash sitting on the sidelines still. You know, obviously there's been a bit of a drag, if you will, in the economy due to COVID and the pandemic. And we did see, you know, a bit of a real slowdown in investment during April, May, and even into June of this year, but that's really picked back up now. I think once people kind of settled in and said, okay, you know, this is what is going on and there is a path forward here. So, you know, that has picked back up. Obviously, the other thing is, you know, we've been working with our existing team now for about a year, well, almost 2 years. And, you know, both internal and external. So we know them better. We know what the expectations are on each side. And we're really starting to build out our selling group in a much better way, figuring out, you know, which of those advisors are, you know, really going to carry the day for us. Because this is, you know, for those who don't know, we only work with accredited and qualified investors. You know, so, I mean, there are, like a Reg A Plus, you can work with non-accredited. We choose not to do that, not to work with non-accredited. But, you know, what you have to realize is not every financial advisor out there has a boatload of accredited investors in their portfolio, right? That's just maybe not their client base. Some have a bunch, some have none. And so you got to figure out, you know, who you can actually work with. And again, back to the industry, I mean, you know, most advisors are pretty happy to tell you, hey, look, you know, I'm not your guy, right? You know, I'm not, you know, that's not my client base, or, hey, my client base would not be interested in this product. So, but what encourages me the most is really just, yeah, I feel like, at least for our company, we're past that entry stage and now starting to get some traction and really starting to become known. We're building out our internal team much better. Haley came in, you know, and does our internal wholesaling and investor relations. So really being able to build out your team internally to some extent, figuring out the, you know, what is going on in the industry. Because I really do believe that as we go into, you know, the end of 20, which we're nearly there, hard to believe, and into 2021 and forward, you know, I think there'll be a lot of opportunity for investment in the alternative space. You know, what we see in the stock market is continual fluctuation. And so when there's that kind of fluctuation in the stock market, a lot of people are looking for, you know, an alternative investment where they can place some capital, have a little bit more control over what's going on, and not just be at the, I don't want to say whim, but, you know, subject to the cycles in the stock market.
I think that's very good, you know, foresight.
I'll ask Kaylee if she has anything that you think. I mean, you're working with our investors. So.
Yeah. And I mean, really to speak to what's encouraging to me about the industry in general is I came into this space, late December. So I had a couple months of normalcy and then COVID hit. So my experience in this space is based broadly on the experience of dealing with COVID and just seeing the way people have kind of shifted, people like you, Tyler, who have created these informational webinar series and just finding a way to work through this. It's a promising future. I think that everybody is working to find a way to adjust to, I think everybody's heard the phrase new normal 100,000 times at this point, but truly seeing that pivot and like Tony said, seeing the investment pick up is very encouraging, and just knowing that people are finding a way to move forward.
Yeah, I think so. The only thing I disagree with, what do you mean it's hard to believe we're at the end of the year or almost there, Tony? This seems like it's been the longest year, that I can remember with all the crazy stuff.
I agree. March, April, May, I didn't think would ever end. But somehow from like mid-July, early August on, I feel has just snapped by for us.
Yeah, I'll go along with that. I think what excites me is that this is a pretty loyal industry. You mentioned that you're on your 6th round of raising money, that there's a lot of upfront investment, both in kind of time, education, and candidly money as well. But once you've kind of made it over those hurdles, it's something that is a pretty good recurring avenue for raising capital. Additionally, I like what you touched on about people wanting to differentiate themselves, or diversify rather, their portfolio from only having kind of publicly traded investments. What we've found is, gosh, there's so many advisors that are not necessarily in our space, but what's the difference between advisor A and advisor B? And I think a lot of them are really trying to differentiate themselves by offering some component of alternative investments. And then along with kind of the shift in demographics as our population ages, I think people are looking for something that's going to have a stated rate of return, or something where they understand the story, right? That their Apple stock doesn't go down because there was turmoil in the Middle East, right? That they can understand your parameters of what it is that you do, and they understand what they own. Well, that's wonderful, guys. I really appreciate you participating in this webinar. I want to look here, and there's a couple of questions. One person asked if you're set up under Reg D.
Yes, we are. We're a Reg D offering.
And then there's another question here. Can you do direct investment in individual commercial real estate deals versus on a fund basis? What is the minimum raise and structure for such? What is the timeline for raise if infrastructure is in place? And obviously everyone's encouraged to reach out directly if they've got a particular set. Is that something you want to speak to?
I can speak to it briefly. We do not do individual investments in loans. You invest in the fund. That's the way we're structured. So kind of, if somebody wants to talk to us, we're happy to chat. But yeah, that we're primarily fund structured.
But the fund itself might be is making an investment into a specific entity.
Yeah. Yes. So
right.
We're doing loans on specific, but the investors don't get to choose which ones they're in, right?
Got it. Well, very good. I know that we've got a diverse base of attendees. If anyone has any additional questions, and I'm sure you've piqued many of their interest and kind of wanting to learn more, whether it's for advice, guidance, investment, or et cetera, tell everyone again the best way to get in touch with you.
Well, you can reach us here at our office line. The number is 937-949-7151. You can reach me. My email is hnoff, KNAUFF @greatoakfunding.com, and Tony @talexander@greatoakfunding.com.
I think one thing I would like to add real quick, and I meant to mention it earlier, about some of the things we wish we had known, is one, it's not cheap to get into this arena. So, you need to really plan a budget. And for those who have maybe raised some cash through friends and family, set some of that aside. I'm not trying to, scare anyone off, but, it's easy to run through a couple $100,000 very quickly because you're going to have to pay legal. You talked about, the due diligence reports, there's probably $50,000 right there, at a minimum. You're going to have to pay for the national account rep. You're going to have to go to conferences. So And a lot of that is money you're going to spend before you ever raise a dime. So, budget, make sure that you really have cash set aside so that when your attorney says, I need a retainer of $20,000, you can actually write the check. Because otherwise they don't have a lot of interest in working for you. I don't know why.
Yeah, I think that's a great point, that there's, oftentimes some sticker shock, and certainly there's some sunk upfront costs, but I'm glad that you two were able to take the time out of your schedule to be with us. You're obviously testament that can be an investment that's well worth it. And, we look forward to having you guys on again to share more of your wisdom. And we thank you and all of the attendees for being with us today. We're going to continue to do these series of webinars. Everyone's giving us a lot of positive feedback, and I'm sure we'll get a lot more after having you both on today. So thank you.
Thank you so much.
Yes, thank you.
Yeah, wonderful. And I hope that everyone in attendance has a wonderful day. Thank you.
Thanks.